Hey, good morning, everybody. It's Hammer. Today is Wednesday, November 29th, 2023. Man, we are almost done with this year. It's crazy. Anyway, good morning. Remember, you can join me live each and every day, 9:30 a.m. Eastern time. If this is your first time here, if you're watching later in the day and you're on the replay, do me a favor. Just put a hashtag replay in the comments, whether you're on Facebook or on YouTube. Appreciate you doing that. It shows the algorithms that you guys are watching, and I appreciate that. Whether you're on YouTube or Facebook, don't forget to smash that like button, give us a thumbs up, subscribe, tag an LO friend, share this post in the group, all that good stuff. Remember, you can sign up for our written lock advice, www.ratelockadvice.com. I write an email each and every weekday morning. It's already out and in the inboxes, giving everybody a heads up on what's going on. Feel free to use it any way that it helps you. Share it, take portions of it, claim it as your own, like some wholesale guys do. I don't care. I get those emails. There's a few wholesale guys that actually steal my stuff and put it in theirs and send it. Listen, man, I don't have time to worry. If it helps them, great. I want to help everybody. Also, sign up for our text alerts, www.ratetextalerts.com. They're $7 a month. You don't have to spend a lot of money to keep track of the markets. You also don't have to learn how to read all the charts and graphs. If you just want to know what's going on, check out our text alerts. Last but not least, originatorssuccess.com. We help you get loans from Google and social media. Although you're here today listening to me talk about rates and pricing, what we really do is help you get found online, build your online brand, generate reviews. We've also got some great engagement campaigns, meaning CRM Lite. Wouldn't you like something that stays out there, keeps you in front of real estate agents and past clients and warm prospects? We've got some awesome stuff. Check us out at originatorssuccess.com. Let's say hi to the live folks and see who my friends are here this morning. Steve Lacefield. Yo, what's up, my man? Good to see you here. We got Rob Stewart. Good morning, my friend. Ron Siegel, always here. Ron, I feel like you and I are besties. I always appreciate seeing you here. Like my man Scott Menser, also always here. Scott, I see you're on Facebook today instead of on YouTube. I guess I'm not on the big TV, but that's okay. Denise Lopez, welcome. Thank you for tagging a bunch of people. I appreciate that. Mallory Fotiadis, good morning. Mike Morano, how you doing, my friend? Kenny Rivard, great to see you here as well. If you're here and I didn't name you, say good morning. Let me know that you're here. Otherwise, let's keep going and get to the good stuff. So today, rate sheets are going to be much better than yesterday. We're looking at an improvement in mortgage bonds of about 65 basis points from when pricing came out yesterday. Let me show you the fancy chart here. Take a look at this. Again, when we are looking at this chart down here, this is the line chart I'm looking at down here. Okay, so right now we are looking at the 6.0 coupon, currently at 100.44 is what it's selling for. It is plus 11 basis points on the day. What all this jargon means, again, is that you are going to see some really, really nice rate sheets today. There's quite an improvement. So bonds yesterday, you could see it here. We saw quite the improvement through the afternoon. In fact, I'm going to move us to the 2-day, and then I'll go back to the 5-day and show you guys what I'm looking at. But yesterday, let me just move this out of the way for a second. Yesterday, if you look over here, right around 10 a.m., right here you go. We had just a little bit of a negative kind of trend yesterday. Consumer confidence data came out and gave it a little bit of a hiccup. But then look at this just super strong improvement through the day, and it held it through the afternoon. Just a little bit of trading chatter here. Other than that, and then this morning improved, and you'll notice we're seeing a lot of improvement in overnight trading now. That's because we are seeing this whole sentiment is global. It's not just U.S. sentiment. It's not just our markets. So what I mean by that is, the expectation that the Fed is done raising rates, very much helping us right now, but it's also expected that central banks all around the world are done. The UK, Bank of England, the European Central Bank, the Bank of Japan, all expected not to be raising rates at this point. Inflation coming down, the economy much slower across the pond than what we're seeing here. So just all these things helping us, putting us in a position where things are going to improve. So the reprice risk today is low. Very unlikely that we have to worry about seeing any reprices worse. Yesterday, there were a lot of reprices better. Let me know in the comments if you got reprices better yesterday, if you saw them on your rate sheets. Of course, on the wholesale channel, we saw quite a few, but I did see a lot of retail reprices better yesterday. We saw that much of a swing. Good morning, Dan Crowley. We did see that much of a swing yesterday that puts us there. The outlook remains very, very clearly that the worst is behind us and that December should be great for rates. Take a look here. Look at mortgage bonds and look at the pace at which we have bounced. Now, remember, I that back in like right over here, I thought, hey, at the end of it was kind of the middle of October, right? Around the Wednesday, the 11th, I said, hey, the worst looks like it's behind us and things should improve. We look like we're really getting a bounce. And then we got one more move lower. We saw rates jump, and that pushed rates up into the eights, clearly into the eights. And we have since recovered significantly. Look at this bounce and this uphill trend. Now, normally, if you were just looking at technicals, this might be concerning. If you're just looking at the charts and the graphs, and you're like, hey, so when we see, why is this not, there it goes. Okay. If you're seeing a bounce like this might scare you, because when you see this much improvement, you're like, well, what goes up has to come down. The thing is, we've seen a very firm shift in sentiment. The whole outlook has changed, right? The idea that the Fed is done raising rates, 98.5% expectation that in the middle of December, we're not going to see a rate hike. January, they're expecting that rate to stay around 5.25. Everyone thinks the Fed is going to hold. In March, look at this though. All right. There is now a 45% expectation that we could see a rate cut in March. Now, just a month ago, that was 13%. Yesterday, it was 34%. Today, this is 45%. Let me show you part of the reason why you're seeing that today. This guy here, Bill Ackman, not him, he's the reporter, but Bill Ackman, you're going to see him in a second. All right. Come on, show me Bill Ackman. There he is, the old guy here. That's Bill Ackman. All right. So this is Bill Ackman. Bill Ackman is a billionaire investor. He is the Pershing Square Capital Management founder. And he says he is betting that the Fed is going to cut interest rates in the first quarter. He said such a move could happen as soon as the first quarter, although traders have been fully pricing in a rate cut here in June. All right. In June, we expect to see, look at this now. They're looking at 4.75. We are seeing a very, very clear movement away. Wow. This is so different just from yesterday, y'all. Just from yesterday. Yesterday, we were still at an expectation that we were going to see the rates in May that would be at 5.25, maybe going to 5. Now it's very clear the expectation that we're going to see a rate cut as early as May, and some are pricing that it could happen in March. The whole timeline for when the Fed is going to start cutting rates is moving up. Now, why is the Fed going to cut rates? Why will the Fed need to cut rates? Well, the idea here is that we've seen this, what's quote called a soft landing, right? The soft landing is the idea that the labor market is retaining its strength. The economy will slow down, but not crash, and that inflation will come down. However, anybody that is looking at the numbers and they dig deeper, they all feel like this is not possible. Now, I don't know. I just don't know. I mean, I could tell you why I'm for it and why I'm against it, right? But the one thing that I do feel, I feel that people are spending money they don't have. We've talked about this in the past. They're using credit, and credit is keeping the economy up. All right. Ron said, now that Charlie Munger is gone, he was Warren Buffett's partner, by the way, for y'all. He died at 99, like Betty White. It's the magic number there at 99. Now that Charlie Munger is gone, Ackman moves up on the top 10 list of the genius list. Yeah, he moves up a notch on that one. So, because, that's why people are listening to him and what he has to say here. We're betting that the Fed is going to have to cut rates more quickly than people expect, Ackman said in an upcoming episode of the David Rubenstein Show, Peer-to-Peer Conversations. That's the current macro bet that we have on. What's happening is the real rate of interest, which impacts the economy, keeps increasing as inflation declines, Ackman said. Ackman said that if the Fed keeps rates in the roughly 5.5% range when inflation trends below 3%, that's a very high real rate of interest. And I do agree with that. So here's the speculation, right? We know rates are going to come down in 2024. Mortgage rates will come down in 2024. It doesn't mean that business is going to get a ton easier, though. You've got to remember, we still have inventory issues. You're going to have consumers that are going to hesitate as rates start to come down. They're going to want to wait, because they're going to want to wait until rates get at the bottom. You're going to have to sharpen your sales skills, and you're going to have to get into ideas like managing your mortgage and adopting the mortgage and that, no cost refis when rates come down. You're going to have to start having these conversations. Mark my words now, this is where things are going. So anyway, this is where we're at as far as this stuff goes. Good morning, Bobby Searson. And let's go back to my captions here. So the Fed watch, again, is market 0% expectation of a rate hike in December. They're cutting on cuts to start by May. Right. But we've gone back between May and June. If markets keep switching now he's making it look like Ackman is making it look like it could be in March, and markets are starting to buy it. They're not there yet, but damn, this is close. Good morning, Allison Foy. So anyway, this is where we're at, y'all. The overall momentum, very, very good for rates. My advice is to flow everything. I wouldn't lock a single loan right now. I really wouldn't. Even things closing, what we normally say the next couple of weeks, we're heading into tomorrow. We get PCE inflation data. I think that even anything that the markets can look at to maintain this momentum and continue to improve, they're gonna take that. So the PCE data tomorrow should come in very much as expected, maybe even a smidge better. We should see another day tomorrow with better rate sheets. It's a very good possibility. And even if it doesn't, it'll recover, because right now markets are like a bullet train. They are just rushing right into this. And the expectation, this is where we're at. So to summarize, the worst is behind us. We've got the PCE data coming out tomorrow, which could help us improve rates this week. Then we go into next week where we've got the labor data. I've talked about this again and again. We got JOLTS, we got ADP, we got non-farm payroll and wages and all of that stuff. Any signs of weakness, this labor data last month was what sparked the rally to help rates get where they're at today. I think we're going to see more of that. Then the week after, we've got CPI inflation data, and then the Fed meeting and press conference. Markets are going to be looking for a reason to rally here. This is where we're at. This is the momentum. Clearly in our channel, we are going to be pushing in towards the end of the year and seeing rates fall. Be careful about what you're locking in, because if we see rates drop significantly over the next couple of weeks, you're going to have to deal with float downs. You're going to have to deal with all that conversation. It is unlikely that we see rates move higher from here. That is now behind us. Okay. Unless we see super strong labor data, super strong economic data. Even this morning, GDP data, and this one's for you, my man, Ron Siegel, GDP data this morning came in revised better. It revised higher, Ron. U.S. economy grew 5.2% in the third quarter. That is a revision. The gross domestic product rose at an upwardly revised 5.2 annualized pace. Consumer spending advanced less robust 3.6 pace. And I'm trying to remember what it was the last number. I think it was 5.1. So anyway, this is coming up higher. This is putting us in that spot where, hey, even with this GDP data coming in, normally when you'd have something like this would be like, oh, signs of strong economy. That means the Fed not likely to cut rates. That would slow things down. Didn't slow things down at all this morning. Mortgage-backed securities, like we said, they were up 11 basis points. Now they're up 20. Again, you should have some really healthy rate sheets. We're up 70 basis points from when we came out with pricing yesterday. That's a big jump. When you're looking at rate sheets, we should see rate sheets that are picking up a quarter, like an eighth of a point in rate right now. We should be going from the 7 3/8 into, using Mortgage News Daily. Should see that firmly drop to 7 1/4. Should be new. I use new in parentheses here, or air quotes. Should be new lows. All right. So we are in a good spot, guys. Let's keep this momentum. I think that December is going to be very good for interest rates. All that aside, I'm going to have, I'm working on today I'll get you guys the text sign up for being notified of the lives. And I sent out an email after asking you guys about when I should do my business. I do my annual planning session, and it was overwhelming for next week. There were a few people that said the end of the month, but I was amazed at how many people wanted this thing. So we're going to do this next week. It's going to run you around $100. I charge to be there because I want you to take it seriously, and I value my time. And this is how I feed my kids. So anyway, I'm going to put out an email about signing up for that, and then I'll start promoting it over the next couple of days. But we're going to have that next week. It's going to be a 3-hour workshop. You've got to set aside 3 hours, have the discipline, set aside 3 hours. And we're going to finish. And I'm doing it a little different than I've done it in the past. I'm still going to use a very similar format because at the end of the day, it freaking works, right? But we're going to I'll talk more about it later. But anyway, look forward. Hey, Lisa, great to see you, my friend. So anyway, y'all, have a fantastic day. Again, the mortgage business, it's going to be tough in 2024, but it's looking better. It's looking better. So keep your chin up. I'll see you guys tomorrow. Have a fantastic day. Bye-bye, everybody.